How you doing, traders? Todd Gordon of TradingAnalysis.com. Today I want to look at the setup in the gold market. Okay, but first I want to take a look at how gold correlates to another key market, which is the 30-year bond market. Okay, bonds and gold are linked both fundamentally and economically. I think they're good markets that respond to kind of risk-on, risk-off sentiment in the market, and they're also very sensitive to Fed policy. Okay, and more importantly, we've had pretty good volatility lately. So I want to take advantage of, I think, a possible setup in gold. First, though, let's take a look at the correlation of bonds and gold. Okay, going back a little bit, you can see they're pretty well correlated in 2013, 2014. What's interesting is bonds, 30-year bond futures, have actually double topped over the last couple months, where gold has continued higher. I think bonds are a little bit more of a leading indicator, a little bit more of a tell, and I think commodity markets are a little bit more emotional and reactionary. So this push up that we've seen in gold, I think, is overdone. I actually want to get short gold. Okay, so from here, let's look at the price of the gold futures chart. Okay, let's look at gold futures. I see this as a good 5-wave decline down to about 1329 in the gold futures. That's a 5-wave move, okay? In the Elliott Wave world, guys, there's no correction that is a directional 5-wave move. It means one of two things. Either it's part of a larger downtrend, kind of the start of a new trend, or it's part of a correction, which means there's actually another down leg to go. So in either case, whether it's a top or whether this is just the first leg of a 3-leg correction, we're going to see lower prices. So specifically, I'd like to look at this level in the futures about 1345. Okay, so there's two Fibonacci levels here. Okay, the first one is 100%. That's simply the relationship of wave A compared to B, and then up in C. Okay, so that is 100% kind of ABC relationship. Another one is up at the 61.8%. That is the retracement of wave 2 compared to wave 1. So we have a really tight agreement between these two levels. So 1345 is the level I'd like to be short. Anything above 1355 is what we call wave count validation. So the trade is no longer valid. Out. That is your risk. Downside should be at least the distance traveled in one, which would be from 1355 to 1329, so call that about $26. And actually, it should be more than that because wave 3 is typically your longest wave. All right, so the way we could do this is in the GLD. I'd like to actually sell a call credit spread to start this trade. Okay, I don't want to go all in at first. I'd like some kind of reversal signal to tell me this is the right trade. So I actually have it priced up over here in my options platform. You could do a, let's take a look here. You could do a 129, 131 March credit call spread for right now about 83 cents. Okay, so I'd like to wait for the gold market to get a little bit higher, closer to that 1345 in the futures. So maybe we can look to sell that call credit spread at like 86, 88, maybe 90 cents. I'll put an offer in there and we'll see if we can get filled on that trade. All right, guys, hope that helps. Good luck, and I'll see you in the next update.